everyone, and welcome back for another deep dive. Today, today we're going to be tackling a question that I think has been on a lot of minds lately.
hmm
Why is the US dollar declining globally? And you've brought me a stack of articles for
Yeah,
research on this.
I have.
So
Buckle up.
buckle up.
Yeah.
This is one intricate economic puzzle with lots of moving pieces.
Yeah, it really is. We have a lot of ground to cover.
Yeah.
Just to give you a preview, we'll be looking at 6 key factors
Okay.
that are contributing to this decline. The Federal Reserve's policy,
Okay.
the diversification of global reserves,
Mm-hmm.
shifting capital flows,
Okay.
the impact of commodity prices,
Got it.
the U.S.'s own economic challenges,
Mm-hmm.
and, of course, those ever-present geopolitical factors.
Wow, 6 suspects.
Uh-huh.
It's like a detective novel where we need to examine each one's motives.
Yeah,
So should we start with the Fed? They've been making headlines with all these interest rate changes.
absolutely. Their recent decisions have had a significant impact on the dollar's value. See, when the Fed raises interest rates, it makes holding U.S. dollars more attractive to foreign investors
Okay.
because they can earn a higher return on their investments. But recently, they've started tapping the brakes on those rate hikes to avoid tipping the U.S. economy into a recession.
So it's like they're trying to walk a tightrope between
Exactly.
fighting inflation and keeping
Yeah.
the economy stable.
Precisely. And meanwhile, other central banks like the European Central Bank and the Bank of England are still raising rates aggressively.
Mm-hmm.
So for investors looking for the best return,
Yeah.
the dollar might not seem as appealing as it once did. It's all relative, really.
That makes sense, but I'm curious, how does this actually impact the dollar's value? Does it really come down to what investors find appealing?
It really does.
Really?
When investors move their money out of dollar-denominated assets like U.S. bonds and into assets in other currencies, the demand for dollars decreases.
Okay.
And basic economics tells us that when demand falls, so does the price.
Okay, so the Fed's actions are definitely one piece of the puzzle, but you mentioned something earlier about global reserves diversifying.
Right.
What exactly does that mean?
So for a long time, the U.S. dollar has been the world's primary reserve currency.
Okay.
This means that central banks around the world hold a large portion of their reserves in U.S. dollars. It's considered a safe and stable asset.
I see. It's like having the gold standard, but with dollars.
A good way to put it, but now
But-
we're seeing a shift.
Okay.
Countries, particularly China and Russia, but also nations in the BRICS group,
Okay.
Brazil, Russia, India, China, and South Africa are actively looking for alternatives to the dollar.
Interesting. Why is that? Are they just trying to lessen their dependence on the U.S.?
That's certainly part of it, but there are also practical considerations.
Okay.
The recent freezing of Russian assets, for example, has highlighted the risks of relying too heavily on one currency.
Oh, I see. So what are these countries doing to diversify? Are they just swapping dollars for other currencies?
It's more nuanced than that they're engaging in currency swaps,
Okay.
where they agree to exchange currencies directly bypassing the dollar.
Mm-hmm.
Some are increasing their gold holdings, which is seen as a safe haven asset.
Yeah.
And China, in particular, is promoting the use of the yuan in international trade and investment.
So instead of one dominant currency, we might be moving towards a world with multiple major players.
It is.
That's a big change.
It is, and it raises a lot of questions.
Yeah.
Would such a system be more stable, or would it create new risks and uncertainties? It's a scenario worth exploring in more detail as we continue this deep dive.
Definitely. But before we get too deep into the future of global finance, let's stick with our list of factors.
Sure.
We've covered the Fed's policy and the move away from the dollar as a reserve currency. What's next?
Next, we'll take a look at the flow of capital,
Okay.
which is always searching for the best returns.
Okay.
Think of investors like water, always seeking the path of least resistance.
Okay, so where's the water flowing now?
Right now, a weaker dollar is making emerging markets look quite appealing.
Okay.
Their currencies are gaining strength, and many offer higher interest rates compared to the U.S. For investors, that translates to potentially higher returns.
Can you give some examples of these attractive emerging markets?
We're seeing particular interest in currencies like the Mexican peso, the Brazilian real, and the South African rand. All of them have appreciated against the dollar recently.
Wow.
It's almost like a seesaw effect.
Makes sense. But if emerging markets are on the rise, are investors pulling back from traditional safe havens like the euro and the British pound?
Not necessarily. We're actually seeing the euro and the pound hold their own against the dollar,
Yeah.
which is a sign of their increased stability.
Okay, so we've got the Fed's actions, the diversification of reserves, and now this capital flow dynamic.
Right.
What else is play a role in the dollar's decline?
Let's talk about commodities, which are often priced in U.S. dollars.
Commodity, you mean like oil, gold, and agricultural products?
Exactly.
Okay, I'm intrigued. This sounds like a complex one.
It is a little bit.
How do commodity prices affect the dollar?
Imagine it like this. When commodity prices are high, countries that export these commodities, especially those with currencies already strong against the dollar, benefit significantly.
Okay.
Their earnings in dollars increase, and their own currencies strengthen further as a result.
Ah, so it's almost like a feedback loop.
Yes,
High commodity prices lead to a stronger currency for exporters, which can then further boost commodity prices.
exactly. And here's where it gets even more interesting. There's a growing trend of countries trying to move away from using the U.S. dollar for commodity transactions.
Hold on, that sounds familiar. Didn't we discuss this earlier with the diversification of reserves?
We did,
Okay.
and it's all connected.
Okay.
When countries start using other currencies for commodity trades, it reduces demand for the U.S. dollar, which can contribute to its decline. It's like a domino effect.
So it seems like everything is impacting everything else.
It really is.
It's almost overwhelming to think about all these interconnected forces at play.
Yeah.
But before my head explodes, maybe you can tell me how this all plays out in the real world.
Sure.
Like, how does this shift away from the dollar in commodity trading affect everyday people?
It impacts the prices you see every day.
Okay.
From the cost of filling up your gas tank to the price of groceries at the supermarket. It's subtle, but it's there.
Wow, I never really thought about it that way. Okay, so externally, we've got all these pressures on the dollar,
Right.
but I have a feeling the U.S. has its own internal challenges
Yes.
that might be contributing, right?
You're absolutely right.
Okay.
The U.S. economy, despite its strengths, faces some headwinds. Two major concerns are the growing fiscal deficit and early signs of an economic slowdown.
Okay, let's break those down.
Yep.
First, the fiscal deficit. What does that have to do with the dollar's value?
The fiscal deficit essentially means that the U.S. government is spending more money than it's taking in through taxes.
Yeah.
To cover this difference, it borrows money, which adds to the national debt. When the deficit grows too large, it can erode investor confidence in the U.S. government's ability to manage its finances. And when investors lose confidence, they tend to shy away from the dollar.
That makes sense. It's like when you overspend on your credit card, eventually it catches up with you.
Exactly. And then there's the looming possibility of an economic slowdown in the U.S.
Mm-hmm.
Early signs suggest that growth is slowing down,
Yeah.
which can further weaken the dollar.
So even the mightiest economies have their vulnerabilities.
Yes, they do.
It's a good reminder that nothing lasts forever.
Indeed. And when those vulnerabilities become more apparent, they can have a direct impact on the currency's value.
Okay, so far we've talked about 5 factors influencing the dollar's decline.
Right.
The Fed's policy, the diversification of global reserves, shifting capital flows, the impact of commodity prices, and the U.S.'s own economic challenges. What's the last piece of this intricate puzzle?
The final factor we need to consider is the ever-present influence of geopolitics.
Yes. The world's a pretty tense place right now, and I imagine all that tension can spill over into the financial markets.
Absolutely. Global conflicts like the war in Ukraine
Yeah.
and strained relations between major powers, such as the U.S. and China, create a lot of uncertainty.
I can see how that would make investors nervous. But how does this geopolitical uncertainty specifically affect the dollar?
Well, for decades, the dollar has been seen as a safe haven currency.
Right.
When things get rocky in the world, investors flock to the dollar because they believe it will hold its value.
Mm-hmm.
But in times of heightened geopolitical risk, that safe haven status can be challenged.
So it's like everyone's looking for shelter from the storm,
Yeah.
but they're not sure if the dollar is the sturdiest bunker anymore.
Perfect analogy.
Yeah.
And on top of that, we have the growing trend of friendshoring.
Friendshoring, this is the first time I'm hearing that term.
Uh-huh.
What exactly does it mean?
Friendshoring is a strategy where countries prioritize trade and economic cooperation with their allies, even if it means shifting away from more established but potentially less reliable partners.
I see. So instead of just focusing on economic efficiency,
Right.
they're factoring in political alliances and stability.
Precisely. And this trend can subtly impact the dollar's role in global trade and finance.
Fascinating. Could you give me an example of how friendshoring might affect the dollar in a real-world scenario?
Sure. Imagine a situation where, due to geopolitical tensions, a group of allied countries decides to create a regional trading bloc that uses their own basket of currencies for transactions instead of relying solely on the US dollar.
Okay, that makes sense. It would definitely reduce their dependence on the dollar and create a more multipolar system.
Exactly. So the geopolitical landscape is undoubtedly another significant force impacting the dollar's global standing.
Wow, we've covered a lot of ground here, and it's clear that the decline of the dollar is a multifaceted issue. It's not just one or two things, but a complex interplay of factors, both internal and external.
You're right. And understanding these factors is crucial for navigating the current economic landscape.
Mm.
It's like having all the pieces of a puzzle and starting to see how they fit together.
Well, I feel like you've given us all the puzzle pieces. Now we just need to figure out how to put them together and what this bigger picture means.
Mhm.
So before we get ahead of ourselves, should we pause here and let our listeners absorb all of this information?
That's a great idea. When we come back, we'll dive deeper into some of the implications of a weaker dollar and explore what this means for the U.S., for the global economy, and perhaps most importantly for you.
Sounds good. Stay tuned for part 2 of this deep dive, where we'll continue unpacking the fascinating and sometimes perplexing world of global finance. Welcome back. In the first part of our deep dive, we explored those 6 key factors driving the dollar's decline. But I'm still trying to wrap my head around what this all means. Is a weaker dollar a good thing
Right.
or a bad thing?
That's a great question, and it doesn't have a simple answer. There are both winners and losers.
Okay.
In this currency shakeup, it really depends on your perspective.
Okay, so who are the winners in this scenario? Who benefits from a weaker dollar?
One group that could see a potential upside is U.S. exporters.
Good.
When the dollar is weaker, American goods become more affordable overseas, which can boost sales and potentially create jobs.
So American companies selling everything from blue jeans to software
Exactly.
could get a competitive edge in the global market. That makes sense.
Exactly. And it's not just individual companies that benefit a less dominant dollar, could also contribute to a more balanced global economy.
Yeah.
Emerging markets would have more room to grow,
Uh-huh.
and we might see a more multipolar world with several strong currencies vying for influence.
Okay, so a more balanced world, less U.S.-centric. That sounds pretty positive.
Right.
But I have a feeling you're about to tell me there's a flip side to this coin.
There always is for American consumers. A weaker dollar means imported goods get more expensive.
Okay.
Everything from electronics and clothing to that fancy coffee you like could see a price hike.
Ouch. Yeah, nobody wants to pay more for their morning latte.
Right. And it goes beyond everyday purchases. A weaker dollar also affects Americans who want to travel abroad.
Hmm.
Study overseas or invest in foreign markets, suddenly your dollars don't stretch as far.
Right, because essentially your purchasing power decreases.
Precisely. And from a broader perspective, a fluctuating dollar can create volatility in global financial markets.
Okay.
This uncertainty can make businesses and investors hesitant, potentially slowing down economic growth.
So it's like this intricate web of cause and effect rippling outward. It
Yeah.
really highlights how interconnected the world truly is. But we've been focusing on the U.S. What about other countries? How are they affected by a weaker dollar?
That's a crucial point.
Yeah.
Let's consider countries that hold a lot of U.S. debt.
Okay.
If the dollar keeps falling, it becomes easier for them to repay those debts, which sounds like a good thing.
It does sound good, at least initially. Is there a catch?
There's always a catch in economics,
Right.
right? While it's easier to repay the debt, a weaker dollar also diminishes the value of their dollar-denominated holdings. This can lead to instability in their own economies.
Ah. So it's like a domino effect. One change triggers a cascade of others. Speaking of dominoes, I can't help but wonder if this trend continues, will the dollar eventually lose its reserve currency status?
That's the million-dollar question, and it's sparking a lot of debate among economists.
Yeah.
Some believe that the dollar's dominance is slowly eroding, while others maintain that its position remains strong, at least for the foreseeable future.
But even if the dollar doesn't completely lose its crown, wouldn't you agree that we're moving toward a more multipolar currency system?
I do agree the rise of the yuan, coupled with the factors we've discussed, suggests a gradual shift away from a dollar-centric world. But as we touched on earlier, this transition raises a whole host of intriguing and perhaps unsettling questions.
Okay, let's dive into those questions. How would a multipolar system actually function? Would it be more stable or less predictable?
Those are tough questions without easy answers. It's a bit like charting a course through uncharted waters.
Yeah.
There are potential benefits, such as reduced reliance on a single currency and greater economic diversification.
But I imagine there are also risks involved.
Absolutely. We could see increased volatility, the potential for currency wars, and perhaps even heightened geopolitical tensions. It's a complex equation with many variables.
So in a way, we're all navigating this shifting landscape together, trying to anticipate the next wave and ride it out as best we can.
Exactly, and then that's why it's so crucial to stay informed. Be adaptable, and avoid making rash decisions based on fear or hype. Whether you're an investor, a business owner, or simply someone trying to manage your personal finances, understanding the forces at play is key.
That's some solid advice. I'm feeling a bit overwhelmed by all this information. Do you think we could pause here for a moment and give our listener a chance to catch their breath?
Of course, when we come back in part 3, we'll distill everything we've discussed into some key takeaways and leave you with some thought-provoking questions to ponder.
Okay, we are back for the final part of our deep dive into the declining dollar. And, I have to admit, this has been a whirlwind tour of the global economy, and I'm still processing everything.
It's a lot to take in.
Yeah, it is. But, now I need your help connecting the dots. What are the main takeaways our listeners should remember from this deep dive?
Well, the first takeaway is that the dollar's decline is driven by a confluence of factors, not just one or two isolated events.
Right.
We talked about the Fed's monetary policy, the diversification of global reserves,
Yeah.
shifting capital flows, the dynamics of commodity markets, the U.S.'s own economic challenges, and of course, the ever-present influence of geopolitics.
Yeah.
All of these forces are intertwined, creating this complex web of cause and effect.
So it's not a simple case of the dollar being bad or good.
No.
It's a dynamic process with
Yeah.
potential benefits and drawbacks.
Exactly. For example, a weaker dollar can make U.S. exports more competitive,
Right.
but can also lead to higher prices for imported goods. It can create opportunities for growth in emerging markets, but also contribute to volatility in global financial markets. It's all about perspective and understanding the nuances.
And the second takeaway is that the world seems to be moving towards a more multipolar currency system. The dollar may remain a dominant force, but it's facing increasing competition from other currencies, especially the yuan.
That's right. And this shift towards multipolarity has the potential to reshape the global economic landscape
Yep.
in profound ways. It could lead to greater balance and diversification, but it also comes with its own set of challenges and potential risks.
So the future is uncertain, but also potentially exciting. It feels like we're on the cusp of a new era in global finance.
We are, and that's why it's more important than ever to stay informed, be adaptable, and think critically about the information we consume.
Yeah.
Don't make decisions based on fear or hype.
Right.
Do your own research, talk to experts, and consider multiple perspectives.
Great advice. So as we wrap up this deep dive, I want to leave our listener with one final thought to ponder. If the dollar's dominance continues to erode, what might that mean for your future? How could it affect your investments, your spending habits, even your career choices?
Those are excellent questions, and I encourage everyone to explore them further. The world of finance is rarely dull, and the only constant is change. By understanding the forces at play, we can make more informed decisions and navigate this ever-evolving landscape with greater confidence.
Well said. Thanks for joining us on this deep dive into the world of the declining dollar. Until next time, keep exploring, keep learning, and keep asking those important questions.